Vox Capital is a investment company that is looking for businesses serving the Brazilian low-income population, especially in the sectors of health, education, and financial services, which are the ones we consider have a more direct impact on the lives of people living in urban poverty, which is the poverty most prevalent in Brazil. So right now, for the past 7 years, we've done 10 equity investments. So we have 10 companies we are partners with, and we also have another portfolio of another 11 companies that we did a convertible debt on the Vox Labs program. So right now we have 21 companies that we have invested so far. Yeah, one company that has been growing a lot is called 2Life. It's a company that is providing solutions for lines in emergency rooms in hospitals. So they created this equipment. It looks like a tablet or a small computer with all the needed equipment for you to do a complete triage of the people that are going through the emergency rooms, reducing the process from 12 minutes in average to 1.5 minutes, reducing lines and helping save lives of people that come to these emergency rooms with serious problems like AVC or heart conditions. They are currently in over 5,000 hospitals in Brazil, and more than 150,000 people go through its screening process every year, every day. So it's a company that we invested 1.5 years ago. Right now we're doing a second round so it can grow faster, and its valuation has been growing a lot. I think both raising funds and finding investment opportunities are hard, very hard. It depends on the market you are, depends on your concept of what impact is, again. But I see more funds, I agree with this statement when I see more funds with available capital for investment than actual investments being made, right? So right now in Brazil we have a group of funds. Most of them are funded, but still very little action when it comes to investing on actual companies. And the main reason I think, I see two main reasons. The first one is the challenge and lack of human capital that we have, right? So you have to have a very good team with entrepreneurial spirit, with complementary skills that make you comfortable that they will be somehow able to deliver the promise of the company or the value proposition. It's very hard to find these group of people. And the second reason I think is impact investors, and this is a critique on my sector, on the sector we are working on, is that we are very afraid of taking risks. And I think we have to understand that when you're doing impact investing, you're adding another layer of risk to what you're doing. So different than venture capital, not only incurring on the risk of the business, but we are also incurring on the risk of the impact. So when you're doing VC, you invest in a business, you don't know if it's going to work. But impact investing, you don't know if the business is going to work, either you don't know if the impact is going to be real. But my feeling is that impact investors, since we don't know yet how to really measure impact, we're trying to avoid the risk of impact. So you want to make sure 100% that this is impactful, and you cannot do that really that clearly. So you're refraining yourself from investing. So I think there's a lack of human capital, but there's also this risk aversion of the fund managers right now. I think it's a combined effort. Well, we learned a lot from our mistakes, right? So I think that you have to be aligned with your investors, so with your LPs. to let them know that some companies, and that's true, some companies are going to fail, right? And some companies may be failing also on the impact side. So on an investment thesis for a fund, for a VC fund, out of the 10 companies we're investing, you can expect that at least 4 or 5 are going to fail. So this is on the business side. But so maybe you could add another layer and say like some businesses are also going to fail on the impact, and that's okay because we're learning. It's a market we're building. So if you align the promises, I think like if you go into a promise that we have a very mature sector, that we know what you're going to deliver, then you set the wrong expectations. If you come to it as a building, as a promise of building the market and learning with the experiences we're doing, maybe you reduce the pool of investors interested in it, but you get them very aligned, the ones that join. So you're able to test and develop the market. So we're really blessed to have a very good group of investors, very aligned with the concept of impact investing, the idea of developing impact investing. So we've been able to do more deals, and we learned a lot. What is impact? What we consider impact right now? What we don't consider impact? And you cannot learn by doing analysis sitting on your desk. The best way to learn is by doing, right? And getting mistakes, getting things right, and moving forward. If you refrain yourselves from doing anything, then we have a roadblock and you cannot advance the market as a whole. So failure has to be part of an expected part of what we do. I don't see an opposition of these two statements. I see if you can't compete with traditional players like philanthropies or government or whoever is doing something on that field, you should refrain from doing it. Because you're not going to get a large enough or a profitable enough or a scalable enough business if you're not more efficient or delivering a better value to those people through your business. So if you cannot compete, you're not going to compete anyways. If you create a business, you're going to lose. But on the other hand, if you're naive enough to believe that you can deliver a better value for those people through your business, and you actually, by innovation, you can deliver. So you should do it, right? So I wouldn't refrain from doing something beforehand, but after trying, if I really understand that it's not possible to do it better than the ones that are already in place, then you should really give up. But the naivete comes before. When you think about it and you really believe, and you have to really believe that you're going to create a better solution than the ones that are here. But if you can't, then you should try something else. First thing, I think better and more well-known, better known success cases. I think we need a pool of companies that are really inspiring and really bring people. I see people say entrepreneurs, employees, investors, anyone that is inspired by those success cases that can bring a halo effect to grow the whole sector. I think we have very few success cases, and the success cases that we have, they may be financial, but they're not as inspiring as, let's say, a Facebook or a Twitter or an Instagram. We need these cases appearing more and more. And on the other hand, I think we have to get we have to improve the way we measure and look at impact. Because we're saying that we're delivering both, right? We're saying like, I want to deliver both financial return and impact. Financial return, I know how to measure, but impact, we cannot stay on the trust me, I believe there is impact here too much longer. So right now we're on the level of outputs, so we're measuring how many people have access to that solution, but we have to take steps to go to outcome and to really understand if this is having an effect, positive effect on the lives of people that have access to that.